Hey guys, John Polemy here, Actionable Intelligence. Today is Saturday, December 7th, and this is the weekly market update. The disclaimer, anything that you hear or see on this podcast or video is not to be taken as investment advice. I am not a registered financial advisor. I cannot give you individual investment advice. This is for informational purposes only. Please do your own due diligence. It's your money. It's your responsibility. Okay, so getting started here. Interesting article in the FT talking about the mother of all bubbles. It says here on the headline, I couldn't really share a lot of it because if you start trying to share too much of this, I've had lawyers reach out to me before if I put too much of like certain newspapers, articles on my, distribution. So I'll just put a link to the article in the show notes. But basically the headline here is the mother of all bubbles, the US has never been so overhyped relative to the rest of the world. Um, and I would agree with that. And of course, people will come back at me and say, well, you've been negative against the US. I'm not negative against the US. What I am is saying that we're making a lot of bad policy decisions that are undermining a lot of the advantages that we have. And it we have a lot of things going good, but we have a lot of things that are undermining, our potential. And the problem is, I think that, uh, we are in a super bubble. Our markets, the dollar, a lot of things are, in my mind, overhyped and aren't really, uh, they're not showing exactly the real picture. But this is what happens in markets, right? They can become bubbles, they can become overvalued. Take a look at this. It talks about it again. My thesis, my overriding thesis is the emergence of a multipolar world in one in which the US is going to become less relevant, not more relevant. And, right now the US is dominating financial markets and there's a lot of capital flowing into the US. So people would say the reverse, the converse of my argument would be, well, that's because the U.S. is the best market. The U.S. has the best prospects. The U.S. Um, is on top, and especially with the election of President Trump, um, things are just going to become better. But my question is who isn't all in now? Who isn't in that is still going to get in? And again, I look at this emergence of these other countries around the world has become more and more economically powerful, more economically relevant, and they're extremely undervalued relative to the US. The US is just sucking in a lot of capital right now, and I think a lot of it is based on hype. It is over owned and overvalued and overhyped in my view. So that's my opinion. I always look to buy undervalued assets and things that are out of favor. There are some things out of favor in the US. Right now, things are very, very cheap in, China, as I've said, relative to the US. And China has been called uninvestable. We've went over this before. And I just don't see the data necessarily matching reality. And this is what you have to look for as a contrarian. Are the markets trading on information that's accurate, or are they misinformed? And that does happen all the time. The idea that the markets are efficient is ridiculous. They're not. They trade on, in the long term, they are efficient in my view, but in the short and medium term, sediment and liquidity is what rules things. And so, if sediment can get way out of whack, things can become a bubble. We've talked about this and demonstrated that many times. We've seen it throughout history. So this is nothing new. And of course, just because something's overvalued doesn't mean it can't become more overvalued. Relative to uh, the historical narrative, the U.S. is probably the most overvalued it's ever been, but that doesn't mean it can't become more overvalued. So, interesting article to take a look at. Um, I'll put a link to it in the show notes. So this is Warren Pies on X. He's talking about sentiment. Wall Street strategists spent 2024 with targets well below the S&P 500. Next year, though, strategists are poised to lift their 2025 targets by 20% versus 2024 marks and 11% above spot S&P 500. This is the largest surge in strategist strategist optimism on record. And so um, there you go. I mean, who isn't bullish? Who's left to buy? Again, that doesn't mean it can't go higher. In this era of passive investment, you have a constant flow of money into index funds. We've talked about that before. That's helping to, you know, just like a buyback, a consistent buyback in the stock over time reduces the amount of shares and creates a upward bias in the stock. The same thing with these passive investment flows. But again, I think a lot of these things, it's only going to take one bear market to, you know, readjust things. And eventually we'll have a bear market. Eventually we will have a recession. And that doesn't mean that there aren't opportunities in the US. I'm very bullish on the oil market. I'm going to talk about that later on, why I am. I have been. And so I will continue to be as we move forward. So the S&P price to book ratio, this is obviously a valuation metric, is basically at 2000 levels. 2000 is when we had the tech wreck. Again, this is showing extreme overvaluation. You're paying a lot of money relative to the book value for these S&P stocks. Again, does that mean it can't go higher? Yes, it can go higher. But I look at this and it's like, historically, what's the bias? If I had to buy and hold emerging markets for the next 10 years or the S&P for 10 years, where would I go? And because emerging markets have been so out of favor for so long and the S&P is so overvalued for so long, I mean, that's where I would make my bet. That doesn't mean that we can't have a, increase in the S&P going forward for the next year, two, three, four, five. Who knows? Maybe it will be higher in 10 years. Maybe the US is now finally is separating itself from the rest of the world and is entering a new era. There are nothing new under the sun, and there are no new eras. Valuations do matter eventually. Again, timing is always the thing that gets people. And again, I'm not a perma bear. I mean, I do find things that are attractive. I do own certain US stocks. There are things that valuation wise and perspective wise, are worth buying in the U.S. But just putting your money overall into the market blindly and into overvalued sectors, mostly based on hype. I mean, who's left to buy? Who hasn't got the memo? So this is from Crescat Capitals. Again, the motto that I have for the newsletter: sell overvaluation, buy undervaluation. S&P 500 versus emerging markets. I mean, you can see the gap. You can see the MSCI Emerging Markets Index in the bottom versus the S&P 500 index. It hasn't necessarily turned upward yet, but you can see these things go in long-term trends. And right now, this is showing that emerging markets are extremely overvalued historically relative to the S&P 500. You will see that when this ratio is down where it's at now, at this level of undervaluation for emerging markets, we saw something similar around the year 2000 when the US market was peaking, and we saw a 10-year run in emerging markets. Is that possible again going forward? Yes, I think it is. And I'm positioning my portfolio a lot, especially in Latin America, which is, from an emerging markets perspective, has been ignored and is cheap. And I've been, buying stocks there for over a year. I'm starting to I'm going to be putting more of those ideas into the Actionable Intelligence Alert newsletter. Why? Because I like the political sea change, the mentality change that I'm seeing. What am I seeing? Well, we see, what's happened with Malay and Argentina, with Bukele and El Salvador. And what I think is, a lot of these things of economics and things around security and crime are prevalent throughout Latin America. And I think if these countries see this, continue to see the success they're seeing, especially in Argentina, if they are able to see growth next year, and I've seen growth projections as high as 6% or even 8%, we'll see. But the green shoots are there. Then you have upcoming elections happening in the next year and 2 years in several major countries in Latin America. For example, in Chile, in Colombia, in Peru, and the incumbents in those countries are polling very, very low their approval ratings. In the case of the president of Peru, her approval ratings are down like around 6%. And the approval ratings of the president of Colombia and in Chile are, below 30%. So um, I'm looking at those and, what's sticking in the back of my mind is Stanley Druckenmiller's idea of look, not what's happening now, but what could happen in 12 to 18 months. And if we are coming up on elections like in Chile next year, and the incumbent loses, and we see a more centrist or more centrist right party or leadership come into play, then we will see possibly a revaluation in Chilean equities like we saw in Argentina, which is, I mean, the index is up over 100%, I think. The individual stocks there that are up even more than that. So I would suggest to you that, again, these are another example, like in Chile, in Argentina, where something went from terrible to less bad, and maybe even will turn from less bad into positive and good. And this is resulting in a massive revaluation of the country in equities moving higher. With Argentina's case, they have a tremendous ability and opportunity because they have this huge oil shale field, the Vaca Muerta shale. I mean, if you want to think about the Vaca Muerta, think about like the Permian in Texas. And it's just now hitting its stride. They'll be soon exporting oil. The growth there and production's happening, and will be helpful to Argentina as it becomes, less reliant on imports of energy and will be able to export energy eventually. I pointed this out in the newsletter and in a previous video. When Margaret Thatcher came to power in the UK after decades of, the place being a basket case because of poor policies. This is in the early 80s. This was just when the UK North Sea was hitting its stride on oil and gas production and increasing. So it does pay sometimes to be in the right place at the right time. Now, obviously, oil itself in Argentina isn't the main basis, but the reforms that they're doing, reducing regulations, getting rid of whole agencies of the government, basically reforming the economy and allowing the economy to become more open, will, based on what we've seen in other countries, result in better economic growth and should translate into higher equity prices. This is something that, why I have investments like in the Republic of Georgia, even though there's a lot of political turmoil going on there being instigated by the West. The country initiated reforms many years ago, economic reforms, and has been in the top 10 in economic growth and economic freedom and opportunity. And that has resulted in a lot of positive growth in the Republic of Georgia. I actually have shares in a company that trades in London that is kind of a conglomerate in Georgia that invests in companies that are expanding there in several sectors and is trading extremely cheap, well below net asset value. So, anyways, we've seen this happen before. We've seen where when countries reform, get away from statist policies, they have a tendency to do better economically. So there's an opportunity, I think, in Latin America for this to happen, a shift, if we see a total shift from the left to the right, or even to the center and more economic liberalization. I know a lot of statists and, socialists and people that believe in government don't like that, but the historical narrative is consistent. The less government you have, you typically have better economic growth. So I want to talk about the Goring and Rosenzweig Q3 commentary that came out yesterday or the day before. One of the things that they've been talking about, especially Adam Rosenzweig, is this whole idea of peak shale. And they've been writing about this for a couple of few years now, and the use that they have had in tracking via using AI and neural networks, and just this is proprietary that they do, and tracking the actual um, well productivity in these various shale basins. And the argument that they make is that, you know, once the Permian peaks, this is when, the the whole world oil market will be readjusting. And it's inevitable that does peak. This is a really good commentary. If you are interested in energy, if you just had forget about just investing in oil and gas, if you are interested in just a little bit about geology and the historical narrative and how, oil wells and oil fields kind of progress through their lifespan. This is, although it's not very technical, which is good. I mean, for a layman, for somebody that's just interested, it's a very good primer about King Hubert, who used to work at Shell, who came up with this whole view about how depletion works in fields, and that once a well or a field gets to 50% produced oil, it typically peaks in production, no matter how much drilling, no matter how many money you throw at it. Once you hit typically 50% of the production of a field, it typically goes into irreversible decline. And so this is important because the shale basins in the U.S., the shale revolution, if you will, basically represented, I think, somewhere upwards of around 90% of the world's um, growth and supply of oil over the last decade. And so if these things are peaking and no longer growing, then this represents a big issue. And it's interesting to note that OPEC, this week also determined that they weren't going to bring on they had cut production over the last year or so, and they were slated to bring that furloughed production back online, but they decided to push that out to April. What's interesting is that Goring and Rosenzweig has been saying that they thought the shale production would peak in the U.S. In 2024, early 2025. And in this commentary, they lay out the evidence of why they think it's peaked now. If that is the case, then we are not able to increase production going forward meaningfully, than or an action, or even more bullish, the possibility that these basins are now in terminal decline, and we'll start to see uh, net decreases in production growth over time. Then the ball goes back into the court of OPEC, relative to market share and their ability to have a better control of prices. I think this is very important because if this is in fact accurate, and it's going to require watching the data throughout 2025 to what actually happens. Um, I think because energy and oil in particular is so bombed out, the sentiment is so bad towards it. If you talk about investing in oil, most people are going to just roll their eyes. China's in recession, Europe's in recession, EV growth and LNG growth in China, EV growth around the rest of the world, oil demand's peaked. Well, it simply isn't true. And so, the underinvestment in the non-shale, because shale has, like I said before, has sucked in all the attention and capital over the last decade plus. There's really been not a big focus on drilling in other parts of the world or in offshore. And so I think this is very important to understand and to track. I'm not saying I'm all in on their argument, because they've been making this argument for about the last couple of years. They've kind of got a little bit more nailed down their prediction. I'm not saying they're all in on their prediction. I think they still qualify it. But if in fact we are seeing a plateau, in production in the Permian. I mean, the other shale basins are already acknowledged to have plateaued in the U.S. But if this is plateaued, then, where's that production growth going to come? And it kind of is part of the, three arrow policy of the incoming Trump administration to drill, baby, drill and get oil prices down. This is totally inconsistent with what the oil companies are saying, as I'm going to point out later. Every producer in the Permian large producers are not talking about increasing production growth. They're not talking about doing that. They're talking about maximizing cash flow, as Chevron said this week. Exxon comes in next week and they'll report on their 2025 budgeting. But if they are doing the same thing as Chevron, then that should be telling you something. So again, you'll get the pushback from some folks will say, well, Adam Rosenzweig and Lee Goring are not geologists. They don't know what they're talking about. If you talk to the people in Houston or around different energy centers or in the Permian, they're just waiting for higher prices and they know where to go and drill. But measuring well productivity, the discussion around, of course, you're going to drill the best quality assets and first, and as you get into the more lower tier or tertiary or the less productive areas, it's just inevitable, right? This is not a cornucopia of oil that never runs out. And so I think you should read this article because they go into a big main discussion around something similar that happened with the peaking of conventional production in the United States back in the early 70s. This is not the first time this has happened. This happens in every oil field in every country that produces oil. It eventually peaks and then goes into terminal decline. And what's interesting to note is in the early 70s, when conventional production, well before shale was even envisioned, conventional production, when it started going into decline, and the Nixon administration was talking about something similar, trying to stimulate and get more drilling, but they were running up against not capital constraints, not willingness constraints, geological constraints. And so they go through that historical narrative and talk about King Hubert's talk that he gave in the mid 50s when he predicted the peak in U.S. conventional oil production in the United States in the early 70s, which came to fruition. And following that methodology and model, it was inevitable that shale would peak also. So if we are at the peak, long story short, this is going to really shift the narrative because right now perception and sentiment is very negative in oil, and this is exactly the kind of contrarian situation I want to be involved with. It's interesting in the dividend portfolio. I created a dividend portfolio. It's kind of a unwanted dividend portfolio. I didn't buy the dividend kings, or what do they call it? The aristocrats. You can do that with an ETF. You don't need my newsletter. But what I've looked for is dividend payers, um, total return type situations that encompass debt reduction, dividend increases, and share buybacks in industries that are out of favor. And that's why energy dominates. Now it's been down. Some of the stocks in that portfolio are down, 25%. I'm talking about major oil companies. But if you listen to their conference calls, even at current energy prices, their focus is shareholder return. Every conference call I listen to, I don't really hear too much about, yeah, we're going to go on this big drilling binge. I hear about debt reduction. I hear about capital returns to shareholders. And I hear the analysts when on the Q&As asking about that. And so that's the narrative. That's the zeitgeist. And so do I think if we had oil at $100 plus sustained for some period of time, a year, that drilling wouldn't increase? Well, obviously it would. Could you see temporary bumps here and there? Yes. But what's the general trend? And so I think it's an area that if you're not invested in, it's worth taking a look at and seeing if you agree. Uh, you know, if you are one of the people that thinks that we are at reached terminal demand or max demand in the world, we're going to go into terminal decline for demand, or if you think um, that you know oil is becoming less relevant. The situation in China is a perfect example of how people misread things. Yes, oil demand for transportation for cars and trucks, delivery, moving goods around is down in China. But if you look at petrochemical demand, it has increased for oil. And so net China imports have slowed, or China's demand for oil has slowed down, but it's still growing. The rate of growth has just declined. And so you need to really look into these things to really pay attention to what's going on. World oil demand's increasing, as I'm going to point out, like in India, it's swelling in these other emerging markets, right? And I just don't see an end to that. But if, underinvestment, and after we're in a situation, we have underinvestment for many, many years in places outside of shale. And then if shale peaks, well, this is a problem and this is an opportunity. So here's a few snippets from the commentary. I suggest you go there. You can download it. You have to give your email and they'll send it to you. It's 30 something pages. They don't just talk about that. They talk about uranium. They have a good article in there also about why what I've talked about in the past about you have to be careful around these linear extrapolations of new trends, i.e. EVs, for example. Well, one of the arguments around copper going higher and higher, which I've changed my view on that too, is that and learned my lesson on this EV renewable energy thing is all these estimates are made about, we're going to have a compound annual growth rate of whatever for EVs and renewables, and this is going to result in the doubling of copper demand. I was of this view even up to recently of 6 months ago. So I don't have any copper stocks in the portfolio. I had talked about, a company like Amerigo Resources, but I have sold that. I talked about that publicly. I've sold that stock. So the only company that I own that has a copper exposure is Glencore, but I own them for other reasons besides just copper. Getting back to copper, though, it's like you have to be careful of these linear extrapolations because they're not really happening. It's not playing out. And they have an article about that too. So, anyways, getting back to the depletion, oil depletion, and the shales, let's look at a couple blurbs from the articles. It says the great drama of American shale production may now be nearing its final act. For years, we have anticipated that the relentless growth in shale output would crest by late 2024 or early 2025, catching many off guard. In hindsight, even the expectation might have erred on the side of caution. Quietly and without much fanfare, both shale oil and shale gas appear to have passed their zenith several months ago. Recent data from the Energy Information Agency, EIA, reveal that shale crude oil production reached its high water mark in November 2023, only to slide 2%, roughly 200,000 barrels per day since then. Likewise, shale dry gas production peaked that same month and has since slipped by 1% or 1 billion cubic feet per day. The trajectory from here, according to our models, looks steeper still. Our view has been met with no shortage of skepticism. Many of our conversations with clients and industry insiders suggest a broad belief that today's declines are but a pause, not a prelude to a sustained contraction. Optimists contend that higher prices and a deregulatory push will spark a new wave of drilling and fresh production gains. After all, President-elect Trump's Three Arrows energy plan prominently promises a 3 million barrel day increase in U.S. oil equivalent production. But we see this optimism as misplaced. The primary focus behind the current downturn are neither policy related nor purely economic. They are geological and inexorable. Depletion, not market dynamics or regulatory overreach, is the central culprit. So there you have it. Again, this is something to put on your radar screen and see if it starts playing out. The EIA they put the data up. You can go listen to the Permian people in the Permian, the operators are the publicly traded ones, what they're saying. Okay. They're not going to say that they're in decline, but when I hear things like plateaus, focus on shareholder returns, things like that, it should be a wake-up call, right? And they're not going to come out and say, by the way, the Permian's in terminal decline. They're not going to say that until it becomes obvious, right? Then they're going to couch it with, well, our production's not declining. Okay, so as even like a company like Chevron said that they're just, they're currently around 900,000 barrels a day of production from the Permian. They're going to take it to a million, and then they're going to, they're looking to like hold it there. They're not talking about increasing above that. Is that because oil prices are low temporarily? Is that because they know they can't do it? What is that, And so if they go into decline, it'll be the discussion will shift to, well, we're kind of in decline. We're waiting for higher oil prices. It'll never be saying, hey, this thing's in permanent decline because everybody will sell it off. So you have to look at the data. The data is not perfect. And so there's a lot of ambiguity around this. And, again, there's a lot of promises being made, kind of like, some of the discussions that, like they point out in the article that happened around when oil production peaked in the U.S., um, conventional oil production when it peaked in the early 70s. So it remains to be seen what's going to happen. But I think it's a tremendous out of favor industry currently. A lot of these companies have repaired their balance sheets. I've got a company in the portfolio that has paid down their debts tremendously over the last several years and now has a focus on 100% free cash flow returns back to shareholders via dividends and buybacks. That's what I'm looking for. I've got companies in the portfolio that are paying, double digit dividend returns, right? They're a little bit more speculative. They're in Latin America, but that's part of that whole, out of favor dividend uh, portfolio that I put together because things that are out of favor yet are still returning shareholder money and then maybe an improving, you could have several things pushing these things higher. So I think that, even if you look at like what's happening in Argentina, right? YPF, who's the national oil company, right, that was nationalized under Malay, um, because of the reforms and the overall positive nature. I mean, the stock has basically doubled in the last year. So if you're in an area where, and this is a company that's facing a big $13 billion possible lawsuit because of the nationalization that happened during the previous regimes there. So nevertheless, uh, it's something to be on the radar screen. I like it because it's something that everybody needs. Oil and gas isn't going away. And it's so out of favor. Nobody's positive on it except for few hardcore people. And yet there are companies there that are having tremendous returns to shareholders. And these things are ignored. Plus, you're in a situation where the whole sentiment and dynamic around the whole narrative could be looking to change in 2025. Remains to be seen. So here's this Chevron cuts capital budget, shift to focus on, quote, free cash flow growth. That's what they say in the article. It says this is the headline from the Financial Times. Again, I can't just publish the articles uh, snippets because it gets a little bit hairy on them reaching out and want me to. I got dinged before on this. It says Chevron cuts capital budget for first time since COVID-19 oil crash. Supermajor's move comes despite Donald Trump's pledge to unleash new U.S. fossil fuel surge. So, maybe Donald Trump's election is a buy the election, sell the inauguration. This isn't the only company that's saying this. Okay. And so if they're going to open all this land, if they're going to deregulate the industry, I think it would be helpful to the industry. But again, as Gorn and Rosenzweig has pointed out, it's not necessarily the reason why the industry or hasn't been able to, might not be able to increase production. It's geological. It's not regulatory. We've had tremendous shale growth under both the Obama administration, the first Trump administration, and the Biden administration. Yes, the Biden administration has locked out some federal lands, but in the shale basins on private land, we've production has been, unaffected typically. And what's interesting is that we have this huge boom now going on because we have this so-called shale gas. Don't forget about this shale gas surplus, supposedly unlimited growth, cornucopia, and it looks like it might have peaked just as we have this boom in LNG export facilities. So if we plateau gas production or if it goes into decline, what happens to that? What happens if U.S. gas prices, that arbitrage of low prices in the U.S. and high prices around the rest of the world, it normalizes more towards the world prices? What does that do to uh, the United States? What's it? We've had this almost a generation We've had almost 20 years of these low gas prices with occasional spurts here and there based on like a hard winter, but basically sub $3 gas or even sub $2 gas for years and years and years. And so it creates a recency bias, an anchoring bias in people's minds, and they can't even think that this could ever change. And if it did, this would be a tremendous investment opportunity. So here's a we've been talking about this. I wanted to point this out. October marked 2024's highest monthly central bank gold buying. We've had net central bank gold buying since basically, for a while. And there's a reason why. We've talked about it before. It continues. It's the primary driver of the gold price to this point, particularly China, Russia. And there's a reason why. We've talked about it. There's this multipolar world that's emerging. And in that world where the US has decided it's going to fight with everybody else around the world that it considers a rival, instead of looking for mutual beneficial outcomes, it's been now using the dollar and the SWIFT system and the financial system as a weapon. And the way to do that is not to be encumbered or not to be tied to that system. China being a top exporter around the world gets a lot of dollars, and the in the past they had recycled those into treasuries. But why would you do that when you have the U.S. calling you out as its number one enemy? The best thing to do is not come out and just sell everything and crash the market, but slowly over time divest yourself of these assets so that they can't be used against you. I mean, if they freeze it, if they refuse to make payments, all kinds of goofy ideas that, some maniac in the US is going to come up with in the State Department. Uh, you know, the, it's better just to have gold in your possession in your vault. And so that's why we're seeing the growth in central bank. It's not just China, it's Russia, Turkey, all these places, all these countries are buying gold for the same reason. The U.S. is basically running around like this stumbling giant, swinging and trying to smash everything, and people just want to get out of the way. And a lot of people in the U.S. don't like to hear that. They think that they used to have this commercial for the U.S. Navy. I used to see it. The United States Navy, a force for global good. I mean, that's what a lot of people in the U.S. Think. The U.S. is a multicultural global empire, no different than the Roman Empire or the British Empire. And its goal is to maintain that hegemon in that empire because it's very profitable and for people that control the empire. And so, as our competitiveness has slipped, as a lot of other, which is, us getting involved with all these foreign adventures and running up our debt, which is the what ends up happening to all empires, you can have to resort to more and more aggressive tactics to try to hold on to this hegemon. I mean, that's my view. Most people don't agree with me. I get comments all the time. If you think it's so great in China, you should move there. I mean, I just imagine the guy standing there with a, t-shirt on with oil stains on it, with a, um, natty light can in his hand and a, cat diesel power hat on with a mullet. That's not the kind of people I deal with. Okay. And that's uninformed. Reality is what reality is. And, you know, that's just how it is. This is going to continue. And, there's no desire in China to run the gold price up. So they buy, these countries buy and they're opportunistically buying as they, and as the price comes back down, they buy more. So there's a lot of, I think that they'll be able to fully divest of the U.S. Treasuries? No, but you're going to see the percentage of central banks' assets shift more back towards gold and away from these financial instruments. This is something that 40 or 50 years ago was the norm to have, 50, 60, 70, 80% of your reserve assets in gold. And then over a period of 40 or 50 years, as the world economy financialized everything, particularly the US financialized this economic system, um, people were like, well, it's just a doorstop. It has no value, blah, 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 all these things. And so people started, buying government bonds and all these other things. So, but if you're going to weaponize your financial system against the rest of your competitors, then people are going to get wise to that and protect themselves. So we had Bitcoin make a new high this week. I think it got to 103,000. I think it's pulled back under 100,000 as of today when I looked. So what is there to say? I mean, we have Bitcoin ETFs now. We have a new administration coming in that is more positive towards Bitcoin. But again, I think that Bitcoin and a lot of these cryptocurrencies, they are a manifestation or a result of, you know, this excess liquidity that's created. I think Bitcoin, I've talked about this before, Bitcoin is really, really tied to, or its increases when it goes into these bull markets are typically based on, liquidity. And there's a good measure of liquidity. And, you see things like recently, this Hawk Taw girl just rug pulled a lot of her followers for 50 million with some uh, coin that she had. You see a coin, I saw a thing on Twitter where somebody was lamenting that their husband put all their resources into fart coin. That's the name of the coin, fart coin. This is just raw, naked greed and speculation. This is not an investment. Do I differentiate Bitcoin and some of these other coins from that? Ethereum? Yes, I do. But this is what happens in these bubblicious uh, environments. You have all of this kind of raw speculation, schlubs, beach bleacher bums, the shoe clerks, messing around with this stuff. And some of these people will make tremendous money, but a lot of people are going to end up getting rug pulled, like the Hawk Taw late girl's followers. She got them for like 50 million or whoever her sponsors were that put her out there. So, yeah, I think that, Bitcoin is relevant now, but you have to be careful that you don't get sucked into a lot of these more speculative things that are just nothing more than, pump and dumps. You have to be careful. You have to be responsible. You have to do your due diligence. It's your money, it's your responsibility. So here is from the U.S. Global Investors commentary this week. It's political winds have shifted in the U.S. have shifted towards Bitcoin. Couple blurbs here. It says President-elect Donald Trump, a former crypto skeptic turned fan, recently nominated Paul Atkins, a conservative and crypto-friendly lawyer, to replace Gary Gensler as the head of the Securities and Exchange Commission. During his tenure at the SEC from 2002 to 2008, Atkins fought for balanced, innovation-friendly policies. His return could pave the way for more regulatory clarity, attracting even more institutional capital into the crypto space. Trump also just named billionaire venture capitalist David Sacks as his AI and crypto czar. Sacks, a member of the so-called PayPal mafia, is another strong advocate for clear regulations in cryptocurrency and artificial intelligence. His leadership, I believe, could help position the U.S. as a global leader in emerging technologies, including Bitcoin, blockchain, and AI. And on Capitol Hill, Senator Cynthia Lummis of Wyoming, a longtime Bitcoin advocate, has proposed the Bitcoin Act, which, if passed, would lead to the creation of a U.S. strategic Bitcoin reserve. Just as a strategic petroleum reserve ensures a steady supply of oil in terms of emergency, a Bitcoin reserve could serve as a digital financial backstop, a buffer against economic shocks and runaway inflation. Well, we'll see. It sounds like the political winds have changed to a more positive framework and attitude towards Bitcoin. Again, I don't think that will extend to Hawk Tog Girls coin or Fart coin or these other ridiculous memes that are out there. These things need to be dealt with and cracked down on so that these more legitimate things like Bitcoin and Ethereum and the more legitimate coins are actually, protected from the taint of these other speculative entities. That would be my view, but we'll see what happens. It's definitely a sea change from what you saw with the Gary Gensler SEC, which was very negative towards cryptocurrencies, in my view. So, speaking of AI, I want to talk about this again, going back to what I talked about. Be wary, be concerned. Don't put all your chips on linear extrapolations of, CAGR, right? But I still have to point this out because this is what a lot of people have as their narrative for energy in energy in the United States, power plant production, even nuclear power. But again, as I stated in copper, the EV situation didn't really play out like people thought. It's really been pulled back a lot of the assumptions. And so we're making a lot of assumptions, even on this particular slide, out to 2030. Uh, but, um, compound annual growth rates have slowed, but they're still growing fairly rapidly for data center power consumption. This is what it's showing. So the forecast between 2025 and 2030 to have a CAGR of 8.7%. That's, compound annual growth rate. So this is why there's so much, this is data center power consumption in gigawatts. And this is data center spent to double in the next 5 years. So we'll have to see if this actually transpires. Same thing, right? You're showing from going from $296 billion in 2024 to, $580 billion in 2028. Basically, you know, not quite a doubling, but very close to a double. Well, more than a doubling. Well, about a double. So 100% growth in data centers spending in the next 5 years. So this is important if it happens. This is why I like Murray Stahl's view and Horizon Kinetics view on this whole situation around data centers. You're not talking about, some little warehouse size thing of, 100,000 square feet. We're talking about exa centers now, right? Data centers are like 1 million square feet. So where are you going to put this thing? Not in suburban Dallas or something like that. And so the argument that they've made, and there are some bets being made on this, West Texas looks like a very good place, i.e., the Permian Basin. These things now are so advanced and create so much heat, these chips, that they can't even be air cooling doesn't work anymore. They have to be water cooled. And when you are water cooling these things, you can't have multi-story. So you need, you know, a lot of space, number one. A lot of people don't want these things by them because I've heard that they sound like, a helicopter. Somebody made the comment that it's one near their neighborhood and it's like you get this constant sound noise from it. Um, you need water, which the Permian has extensive amounts of, and you need energy, right? And just throwing these things on the grid in an already congested areas like on the East Coast won't necessarily work. So if you look at uh, what Horizon Kinetics makes the argument is you look at West Texas and the Permian, and there's also been a couple companies that are taking advantage of this. One was recently created, one's over 100 years old. Land companies that have rights to a lot of land in these areas, and have access to water uh, and space. And then you look at the excessive amount of gas that's being produced there, natural gas as a result of the oil production in the Permian. Then you can throw up, natural gas fired cogeneration plants to power these things. You have the space. Nobody lives out there, so the noise won't be a factor, and you have water to cool these things. So um, something to pay attention to. One of the stocks that I'm not going to mention on here, but is up about 50% or even more than that this year. It's a recently created entity in West Texas. And again, there's a legacy company, um, Texas Pacific Land, you might want to look at that is looking into hosting these things on their land. That's a royalty trust that I think it's a public company now. They converted from a trust, but they have extensive land holdings in West Texas and especially get a lot of royalties from oil and gas on their land, and they're looking to get into this data center thing. So again, refer back to the recent commentaries by Horizon Kinetics if you want more information, because they've done a lot of work on this, and I think they make a very reasonable argument of why this could happen. And this is from the Daily Shot. I mean, so the spending is happening. U.S. private construction spending, data centers, billions of dollars. There's a blurb put in here, or a arrow, Chat GPT launched to the public, which was November of 2022. And you basically see the data center spending go ballistic. It's basically doubled the construction spending in the last couple of years. So um, people are building these things, and so we'll see what happens. But uh, again, as these things get larger and larger, and the requirements, the water requirements and energy requirements, we'll see if it gets limited around urban areas, and they have to look to an area where they can do better. Again, this is why you have all of now the big Google, Amazon, Microsoft, Oracle, Meta, all interested in SMRs and nuclear power because, of course, they want clean energy. I'd say that with italics. So they even have to move past oil and that or more past natural gas cogeneration because if they want to maintain their eco bona fides, they can make the argument with nuclear. Notice they don't talk about solar and wind and batteries for these things, okay? Because it's just not workable engineering, okay? And they talk about natural gas cogeneration and nuclear, the SMRs, molten salt reactors, things like that. So um, these things continue to get built. We know that what they require, and I think that's an opportunity here. And with a legislation or a regulatory uh, over the next 4 years, regulatory oversight in the U.S. being positive towards this, this could be a tremendous opportunity. So I wanted to point this out because we lose sight of this. Natural resources are the business is very difficult, very hard, and it's an extractive industry. That means as you produce whatever commodity or resource that you're producing, you have less of it. So you have to constantly look for more and newer reserves to replace the ones that you've produced. Otherwise, at some point, you go out of business. I've pointed this out before. What's interesting to note is S&P had a report where it says that budgets allocated to grassroots exploration are at an all-time low. This is going to be a problem at some point if people are not investing in grassroots and they don't want to because they don't see the returns there, which I believe is now has already planted the seeds and further planted even more seeds for part of the super cycle that I'm advocating for. So here's a couple blurbs from the article. It says global miners have been constantly cutting back on early stage exploration since the early 2000s when grassroots share of global budgets was at its height. But now it has fallen to its lowest point ever, S&P Global says in its latest report. According to S&P, allocation towards grassroots exploration, non-ferrous metals, continued its downward trend in 2024, down 8% to a new record low of 22%, totaling 2.79 billion. They're talking about 22% of the total exploration budget. This represents a sharp contrast to the period of 1997 to 2004, during which exploration companies concentrated on new discoveries with grassroots projects receiving nearly half of the annual global budgets. So they're still exploring around, existing or trying to increase their resources at existing mines. Of course, the best place to find additional resource is next to an already existing mine. But at some point, you're going to have a surge in grassroots exploration. This will come only, I think, when we see massive price increases. So I think it's a opportunity. I have probably one of the biggest, best drilling companies in the portfolio. The company makes money, it cash flows. It's been buying shares back, but its sales are kind of stagnant. They kind of like, up or down 5 or 10%. Either way, sometimes they're up one quarter 5%, then they're down 5%, but they're still cash flowing. They recently made another acquisition in South America. Eventually, the worm will turn, and we will get a massive increase in spending, and a company like that will do well. In the meantime, they continue to capital allocate. It's a waiting game on these things. You just buy good businesses and wait for the inflection. And sometimes not sometimes, I would say most of the time, take a lot longer than you originally think. So again, I have a view towards China that's not the same as a lot of the policymakers in the US have, or a lot of the people that are in investment community have towards China. I wanted to point this out. So China became the world's largest exporter in 25 years. So if you look at the year 2000, these are the annual merchandise exports of the world's largest exporters. And you see that the US dominated. That was 24 years ago. Now, the hollowing out of the U.S., the selling out by the financial interests in the U.S. of the U.S. workers, U.S. industry had started before this, back in the 90s, uh, in particular during the Clinton administration, and even before that, as the pointy shoes made all these arguments of why we should move things overseas and it's cheaper and blah blah blah. And you saw China was the seventh largest exporter. Now, 23 years later, China's the largest exporter, and the U.S. is the second largest. And you see who else is on here? Germany, the Netherlands, Japan, Italy. I'm surprised Italy and France are this high, but they are, and South Korea. So China now has overcame the U.S. We have this now big push of having this industrial policy. We're talking about having tariffs, all these things. But again, if you look at China's trade with the U.S., for example, it's actually lower. I mean, they trade with the rest of the world. Their trade with the rest of the world has already crossed over where it's higher than the U.S. I don't think they're going to abandon the U.S. I still believe that there's going to be some kind of Mar-a-Lago Accord where some deal gets made with the U.S. and China on trade. I think it'll be extremely bullish for both countries, but I think that's going to happen. I think, these are negotiating tactics. This is what Trump does. He negotiates. He sets the demand bar very high, and then him and his team, I believe, have a view of where they want to get to. That's below that, but that's where you start, right? You start with this outrageous demand. That's negotiating 101, right? You come in with all these demands, and then you understand where you want to get to and what's non, how far what's negotiable and how far you want to go down, and then you try to work down to that. So I believe that's going to happen, uh, but we'll have to wait and see, right? But this is tremendous. I mean, how many people realize this? And yet you have everybody in the political class, the financial class. China's uninvestable. Uh, it's in decline. It's a communist country, blah, 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 blah. And yet you have this over 23 years. Who was paying attention? Then you have here, China will be nearly half of global manufacturing by 2030. China is taking over global manufacturing. By 2030, they will account for 45% of global manufacturing. That's one country making nearly half the world's stuff. How did they do it? Strategic industrial policy with a long time horizon. See, this is the advantage that they have with the one party state. You may not like it, and you may think it, people don't have freedom. There's many people that live there. You can have as much freedom as you want in China. You just can't, you know, challenge the government. Okay. And so the people in the China are willing to make that trade-off. The people in China are not Americans. They don't have the same history and culture as we. They have a different culture. They have a different religion. They have a different historical narrative. This is what people in the U.S. Again, it goes back to that that part in Full Metal Jacket. When that colonel is berating the primary character Joker. We are here in Vietnam to help the Vietnamese because inside every Vietnamese is an American trying to get out. That's the attitude that a lot of Americans have. They have this very nationalistic, jingoistic. That's every country has that, right? My country's the best because I live there. Okay. Well, if you invest based on that, maybe that'll work out for you. But I think with the way the world's set up now and where it's going, you have to be a little bit more open-minded, I think, to what's happening. Here's another thing. China's growing research and development spending. It's now second behind the United States. This is an advantage that the U.S. does have. Okay, we spend a lot of money on research and development. We have a very dynamic startup culture and high tech sector, and these are good things, but this isn't going to be the entire economy. Okay, and the Chinese are coming up behind us. You know, I think it's good in this election that it's kind of peak DEI, peak um, goofiness, but that's not going to go away. There's still, 40% of the population of the U.S. that wants DEI, that wants affirmative action. They don't even discuss these things in China because it's a homogenous society and it's, for the most part, a meritocracy. It's very competitive to get in universities. The people there want their children to be successful in, you know, doctors, engineers, what have you. Um, and there's a lot of competitiveness towards this. And research and development spending, look back in 2013, which was only 11 years ago, you see where China was on research and development relative to the G7 over here, ex-US, here's the US here, and just look what's happened over time. This is going to continue. What makes you believe this is going to turn around and go into decline? Who's becoming less relevant is the G7, ex the US, Europe, basically. The more you spend on R&D, the more breakthroughs, the more things are going to happen. Plus, you have a population that's homogenous, pulling the wagon in the same direction, not distracted with nonsense about transgenderism and DEI and the rest of this nonsense, okay, that we worry about here in the US. Yes, you're going to get a somewhat of a respite for it with under Mr. Trump, but there's still that undercurrent, and you still have, uh, like I said, good half the population that is for this stuff. There are 1.4 billion people. We're, 330 million, and if half the people, 40% of the people, uh, are pulling the wagon the other direction, this is a net negative. This is one of the things why I don't believe in all this immigration and all this multiculturalism. It doesn't work. It becomes a racial spoil system where each group bands together to try to, strip the carcass while they can. And that's very hard. That's a hard saying. That's a hard thing to think, but that's reality. So here's Glenn Deason. He's on the Duran a lot. I like this guy. He's a academic. I think he's in Norway. He's pretty good. He has some good discussions. They have bring guests on the Duran with Alexander and Alex. But here's what he says. I put here the EU is failing. It is failing. The EU is going to rupture and fall apart. It's just that has to happen. Okay. The only other option, that's one option. Uh, the other option is it just becomes a new Eastern Bloc where it just walls itself off to the rest of the world, enacts, enacts trade barriers and ridiculous, but look at these ridiculous policies. I mean, for heaven's sakes, you just had an election. This is what they do. Just had an election in Romania. You had a ultra right wing, I'm gonna say ultra right, a right wing Orthodox, devout Orthodox Christian got the most votes to be president. And so the Constitutional Court in Romania said, nope, election doesn't stand, got to have another election. This is what they did in Ireland when this is what the EU does. When they don't get the election result that they want in Brussels, they nullify it. They find a way to nullify it. They got the Constitutional Court to do it, which is, primarily left wing, and they just will make you re-vote until they get the answer they want. In Ireland, I think for Ireland to acquiesce to the EU, they made those people vote 4 and 5 times, and every time they voted, it got closer and closer to the result. And they finally got their 51% and said, "Well, we're good." Now, so they're all for democracy as long as they get the result they want. The reason they didn't want this guy to get into power in Romania was because what was he saying? He's not going to allow any more grain imports from Ukraine to go through Romania. He's not going to have any more weapons and money going from Romania to Ukraine. They weren't going to have that. And so this is going to rupture because uh, this is not going to work because the policies that, this vassal state situation that they've put themselves into the U.S. I mean, for heaven's sakes, the UK and the United States blew up Germany's cheap energy from Russia. And Olaf Scholz walks around like you know, promulgating this view that five Ukrainians on a sailboat did this. I mean, if you believe this, you're dumber than a box of rocks. This was an act of war against an allied nation that you're in an alliance with. I mean, I sincerely believe that there are members of the German government, including Olaf Scholz, that didn't know that the US and the UK were going to do that. They just did it. And what was he going to say? And so it's conveniently not even talked about. Sweden had an investigation, inconclusive, and no one talks about it anymore. It's been, taken away from the media. Okay. And it's just stuff like that that goes on and on. In the meantime, you see what's happening. You know, Political winds are shifting slowly but surely because people have had enough. So what does Glenn Deason say? It says, after dominating the world for centuries, the Europeans do not recognize that they have been demoted from subjects to objects. Convinced that they are U.S. allies rather than vassals, Europe's political leaders believe that pursuing national interests undermines the collective West. As the U.S. pivots to Asia, the Europeans should diversify their economic partnerships to maximize economic strength and political autonomy. Instead, Europe further subordinates its politics and economics to prove its value to Washington. After destroying the continent, this entire political class will eventually be thrown out. Well, we hope so. But how much damage can they cause in the interim? How much damage can they cause in the interim? I mean, look at these ridiculous people. Ursula von der Leyen, come on, unelected head of the EU Commission. You had this ridiculous Annalena Baerbock. She went to China. She's over there lecturing China. She's lecturing the Russians, saying, the 1.4 billion people in Europe. There's not 1.4 billion people in Europe. I mean, these people are ridiculous. Robert Abeck, who destroyed the German economy, former children's book writer. These are all eminently qualified people, obviously. And it's not just them, it's the people. The people elect these idiots. So again, these are democracies. You can make the thing, well, you just said that yeah, at the margin they can affect things, but you know, you just got to stop participating in this. You know, you have the AfD on such a rise now in Germany that the Germans government's talking about banning them. So much for democracy. Do people listen to themselves? Democracy in Ukraine. We're saving democracy, and we're going to ban a political party because we don't like what they're saying. Then no discussion about the policies that the stoplight coalition put in effect that caused all this, and they're ridiculous, as Glenn Deason points out, their demotion from subjects to objects, and they're running around, trying to please the U.S. At the expense of their own national interests. But that's the way it is. So they'll either throw the yoke off of these idiots, the EU will dissolve, these countries will pursue their national interests as they should, and maybe small blocks. Maybe some of the Eastern European countries that are more aligned will create a smaller bloc. I don't know. They'll either do that or become less and less relevant. You know, here's the US and Eurozone growth forecasts. They're moving in different directions. Why? Because energy is so expensive in Europe and energy permeates everything. Oh, by the way, I think they just turned on the other Power of Siberia pipeline from Russia to China last week. So all that, a lot of that gas could be going to Europe, but instead Europe's buying gas, LNG gas. They better hope that Goring and Rosenzweig isn't accurate and that gas production doesn't go into decline or plateau, because with all of these LNG export facilities come online, if the price of gas in the U.S. goes up more closely to the world average, then they're really up a creek without a paddle. So here's a slide from X. This is the quote that was on the thing. Basically, this is showing you the startups. It says public from scratch US and EU companies less than 50 years old with $10 billion plus market caps. So you see in the US, you see Apple on there, Microsoft, Nvidia, Amazon, Meta, Google, Netflix, all these companies, right, that have been created in the 50 years, in the last 50 years in the US and then you see over here the EU. There is no innovation in Europe. And the quote that was on the tweet sums it up. It's a museum as a continent and a museum as a stock market. And so again, they'll either throw the yoke off, pursue their national interests, have a, get away from the statism, or they'll continue to do what they are. To just the sclerosis will continue, and they'll have to enact. They'll just be wall themselves off for the rest of the world and try to maintain the status quo. I don't think that latter will hold, but we'll see. In the meantime, the U.S. is basically taking advantage of this. People, the talent pool in the EU is going to leave. People aren't going to stay there. If you have anything on the ball, you're not going to stay there. You're going to go to Latin America. You're going to go to the U.S. You're going to go to, you know, um, Asia, wherever, and you know, do your thing there. Why stay there in the EU? Nothing's happening there. Okay, guys, that's it for this week. Appreciate the support. Again, the channel continues to grow. The AIA Actionable Intelligence Alert newsletter continues to grow. Again, if you're interested, I do have the free Substack email that goes out, the free AIA newsletter. It's basically where I curate all the week's best information, whether it be podcasts, videos, articles, memes, what have you, that basically are around the themes that I discuss in these weekly videos. It's kind of your gateway drug to the paid version of the newsletter as people then want to understand, like, how can I take advantage of some of these trends and the things that we discuss on these videos. So that's it for this week. We'll talk to you next week. Have a good one.